Hey, what's going on everyone? It's Griffin here and I hope you're all having a great day. Now, it's been a while since I've made an update video on telemedicine stocks, specifically CloudMD, where the last time we spoke about this company, their stock was trading for right around $2.23 a piece, meaning that since that last video, quite a bit of business news has been released for CloudMD and the share price has continued to climb by roughly 26%, give or take, even after yesterday's steep 10% consolidation after news was released about a new share issuance, all of which we'll be speaking about in today's video. Now, if you've been following the channel for a while now, then you would know that I'm a huge believer in the telemedicine space as a whole and therefore quite bullish on the companies that operate within it. And obviously, this would include CloudMD as they are one of Canada's leading players in this space, and I've personally been a shareholder for multiple quarters now since shares were trading for around $1 a piece. So while recent volatility in share price can be difficult to see in your portfolio, I'm not necessarily concerned whatsoever because I plan on holding shares of CloudMD along with other telemedicine stocks for years to come as this industry really matures. CloudMD has also recognized that I've been a long-term supporter of their company and I've been expressing my positive opinions about their operations for months now on the channel. And so for this reason, they reached out to me last week completely out of the blue and wanted to sponsor one of my videos. And honestly here, there couldn't be a more natural fit for my channel. Again, I only do this type of sponsorship deal for companies I actually believe in. And in the case of telemedicine and CloudMD, I 100% believe in this industry and the growth that it's going to experience over the coming decade. So this was basically like one of your favorite companies reaching out to you and wanting to do collaboration. With that said, yes, I am a shareholder of CloudMD and I've been so for long before the company has ever reached out to me, but I did just want to make that clear. So with that said, let's dive right into the company's recent business news as well as their financials, and then finally, I will share my thoughts on why I continue to be a long-term shareholder for CloudMD. Alright, so first diving into the company's stock quote, we can see a pretty brutal past couple of days for the stock and shareholders where the stock price was down over the course of yesterday's trading, and this is after recently reaching a nice $3.14 share price as of Tuesday's close. Now, the reason why shares have dipped so dramatically since yesterday though, and why we see this weird long bar here during yesterday's trading is because CloudMD requested that their stock's trading be halted before the release of this article, where the company has announced that they will be going through with a new bought deal offering of $55 million. Now, trading for CloudMD's stock on Wednesday did resume following the news at 11:30 a.m. though, but during the day, the stock price wasn't really able to recover, trading sideways for the majority of the day. But let's dig into this news release a little bit further to see what it's all about and why shares were down. So essentially, this news release is providing information regarding a new share issuance in the range of 20.4 million common shares of CloudMD at a share price of $2.70 Canadian for gross aggregate proceeds of roughly $55 million, which is quite a bit. And this is essentially why shares have been down in the second half of the week, because the company has basically raised new capital at a value of $2.70 per share when market value was quite a bit higher previous to Thursday's trading. And issuing out more shares to the public also has the impact of diluting shareholder value, which typically is going to have a direct impact on market price, which in this case it has. Now, with that said, this isn't the first time that CloudMD has issued out a large portions of shares in order to raise capital with the goal of mergers and acquisitions. This is something they've actually done quite a bit of over the past year or so, where they've acquired multiple other Canadian medical firms with the goal of expanding their medical footprint and have reach in multiple different facets of the telemedicine space. For example, over the last couple of months alone, CloudMD has acquired multiple other firms and directories, such as the Canadian Medical Directory, which is Canada's largest directory of medical professionals, Refunction, which is a medical rehabilitation firm, Snap Clarity, a mental health assistance platform, RXI Group, Humanicare, and others, all with the combined goal of making CloudMD a full medical service provider all under one roof. Now, many other other companies that we've spoken about on the channel have also attempted this expansion through acquisition strategy, because it essentially allows a firm to go ahead and purchase other companies and therefore increase their top line and customer base significantly more rapidly than if it were to only focus on the growth and expansion of the main parent organization's growth, which, by the way, CloudMD's revenues and customer base are skyrocketing. This strategy does require quite a bit of capital to put in action though, and brings us back to the reason why CloudMD has recently announced that they're issuing out an additional 20 million shares in order to raise capital for further merger and acquisitions. With the capital, CloudMD announced that they plan on issuing the net proceeds of this new offering on strategic merger and acquisition activities, working capital, as well as general corporate purposes, but most likely this capital will continue to be used for further acquisitions, like their recent announcement that they will be acquiring Vision Pros, which is a digital eye care platform with a suite of vision care tools. Vision Pros is a vertically integrated eye care platform with nearly 1 million unique customer accounts across North America, which makes this one of CloudMD's most important acquisitions, that also offers a subscription model to its users for contact lenses and glasses, which provides the company with consistent recurring revenue. So this is yet another way that CloudMD is looking to further expand their business line and touch upon a new facet of medicine that previously they were not operating in. But this acquisition will also allow them to now access the digital e-commerce medical space. Eye care as a whole, as well as the monthly contact lens space, are massive industries. So this type of acquisition allows CloudMD to access a new customer base as well as an e-commerce medium where they can now bring these customers into their ecosystem of medical services, where they have multiple cross-selling opportunities now. And this acquisition is also a big deal from a monetary standpoint, in that this is set to increase CloudMD's annual revenue run rate to now over $85 million, which is significant for this company. For comparison, CloudMD's last fiscal year revenues were only $6.769 million, and now trailing 12-month revenues are currently at $11.648 million. So the company has been steadily increasing their income quarter over quarter, but this type of deal is going to propel their income nearly 10x. Obviously though, this type of deal isn't coming cheap, where the acquisition will be completed for $30 million in cash, $30 million in share equivalency, and then an additional performance-based earnout of up to $40 million in value, either cash and or share-based compensation. So essentially, we're looking at roughly a $100 million buyout of Vision Pros by CloudMD, making this by far CloudMD's largest acquisition to date. But considering that CloudMD's trailing 12 months of revenues is right around $11.6 million, and this new deal is set to bring their revenue run rate for 2021 upwards of $85 million, we're looking at an acquisition that's going to increase CloudMD's total company revenues by roughly $65 million, which is massive. And this is exactly why the company is issuing out 20 million new shares in order to raise roughly $55 million. As of the last reported quarter, the company already had $34 million in cash reserves, but this new bought deal offering should raise this figure to above $90 million in cash reserves, allowing CloudMD to continue their growth through acquisition strategy, starting with Vision Pros. Now look, I have spoken in the past about how share issuances like this do dilute shareholder value, and in turn will have an impact on shorter term share prices, as we're seeing right now over the past couple of days for CloudMD. But really, CloudMD is all about mergers and acquisitions, and this has been their strategy for multiple months now since I've been speaking about this company on the channel. They've done it previously and they're continuing to do so. So even though in the shorter term share issuances isn't necessarily something that's fun to see as a shareholder, well, this is allowing them to skyrocket their top line and therefore continue expanding, which over the long term is going to have a positive impact on this company's growth and therefore the value of an investor's investment. And regardless, I'm not looking at my investment in CloudMD with a short-term investment horizon anyways. This is something I've spoken about a lot on this channel in regards to telemedicine stocks, where the innovation and industry catalysts are only just starting and will take years to be fully implemented. And therefore, this type of share sell-off upon news of a bought deal offering is a good opportunity to buy more shares and hold them for the long-term growth of this company as it rides the telemedicine wave. So in the larger picture of CloudMD's future business and growth initiatives, I honestly see this as a good thing, even though in the short term we are seeing share dilution. At a revenue run rate of $85 million for 2021 though, that would place their forward price to sales ratio as of right now at 5.44x, which is significantly below what we've seen for CloudMD over the past year, where it's typically been hovering between 30 and 40x. Even before the news of the bought deal offering and the upcoming intention to acquire Vision Pros, CloudMD was forecasted to increase their annual top line by an average of 75.6% each calendar year and then start becoming profitable by 2023. Now, obviously, these are forecasts that can quickly change, but the aggressive expansion behavior that CloudMD is demonstrating in combination with all the catalysts that we've spoken about regarding telemedicine, this is all contributing to 5 analysts currently giving CloudMD an average price target of $3.91 per share, which leaves ample room to grow from the current share price. I'm just extremely bullish though on the telemedicine space as a whole, have been so for a while and continue to be. This is something I've expressed on the channel multiple times over the past couple of months, and I really think that this is an industry that the pandemic has further fueled for growth over the coming decade. And for CloudMD, it's aggressive moves and acquisitions like this one that are really going to propel their top line and allow them to further solidify themselves as a key and top player in the space. I really hope this update video on CloudMD was of value to you. A lot of viewers asked me to make an update on this company since it's been a while since I've done so, and previously this has been a company that I've mentioned a lot on the channel. If it was of value to you, make sure to drop a like. It really helps the channel out, and also consider subscribing and hitting the bell button to be notified of new and upcoming investing content. Also, if you're new to investing, make sure to check out the links down in the description to resources that I use and recommend for new and intermediate investors. So on that note, thanks a lot for watching today's video, and I'll see you in the next one.